The trade war is back, and it's bigger than ever. The US just slapped a massive 104% tariff on Chinese imports, and China isn't backing down. From market chaos to global economic shockwaves, this could be the beginning of Trade War 2.0. What does it mean for prices, jobs, and the future of the economy? Let's break it down. The tariff that sparked the fire. On April 8th, 2025, the Trump administration announced an unprecedented 104% tariff on Chinese imports. It's one of the steepest tariffs in U.S. history, targeting everything from electronics to textiles. According to Treasury Secretary Scott Bessent, the move was necessary to protect American jobs and reduce the massive trade deficit. But this wasn't a one-sided punch. China's retaliation. We will fight to the end. Just hours before the U.S. announcement, China introduced a 34% retaliatory tariff on U.S. goods, set to take effect on April 9th. In response to Trump's escalation, Chinese leaders declared they would fight to the end, calling the U.S. strategy economic blackmail. The Chinese yuan dropped to a 20-month low, signaling Beijing's willingness to play hardball. Global markets react. The global markets were quick to panic. The Dow dropped nearly 1%, the S&P 500 fell 0.2%, and Europe's major indices tumbled. Asian markets also took a hit. Rumors of a potential pause briefly lifted hopes, but the White House shut those down fast. Investors are bracing for a longer, deeper economic standoff. What this means for everyday people. For the average person, this trade war isn't just politics, it's personal. Tariffs could mean higher prices on everything from phones and TVs to clothing and car parts. Small businesses that rely on Chinese imports are especially vulnerable. And if the standoff continues, job losses in manufacturing and retail could follow. Currency devaluation, China's secret weapon. China's weakening of its currency could help offset tariff impacts by making exports cheaper. But the U.S. sees this as currency manipulation, a move that might lead to even more aggressive policy responses. With both sides doubling down, there's no clear off-ramp from this collision course. The 104% tariff might go down as a defining moment in global economics. Whether it's a smart strategy or a risky gamble, one thing is clear. We're in the middle of a new trade war. What side effects will hit next? And who will blink first? Let us know your thoughts in the comments. Subscribe for more real-time breakdowns of the biggest stories in global finance, tech, and politics. Turn on notifications, because this story is just getting started.